Everyone for joining. This is Michelle Savage, and you are here for the XBRL US webinar on Dive into Debt Securities, DQC Rule Set 19. I just want to thank all of the members of the Center for Data Quality for making this webinar available to today, including Topan Merrill, the AICPA, DataTrax, Edgar Agents, Donnelly Financial Services, RDG Filings, and Workiva. We have with us today Campbell Pride, and Campbell is our president and CEO. We will be offering CPE credit for the program today, so we will be taking poll questions at 2 points during the session. And if you do have questions or have any kind of technical issues, please email us at support@xbrl.us. And actually, if you have questions for Campbell specific to the content that we'll be covering, you can click on the Q&A link on your website console and just key the questions in there, and we'll take them as they come in. We may be experiencing a few technical issues today, so I just want to give you a little bit of a heads up on that. Hopefully we won't have any problems, but we just did have a few technical issues a bit earlier, and we're hoping that we've resolved all of those. So with that, I'm going to move ahead to our agenda. For our session today, we're first going to focus on investment guidance. We prepared, or the Data Quality Committee prepared investment guidance to go along with the FASB implementation guide on investment schedules. And so Campbell's going to be walking through that. We're then going to cover some CPE questions, and then we'll get into a review of the proposed Rule Set 19 and talk a little bit about the final Rule Set 18, which is finalized and out and available for everybody. And then we'll cover our final CPE questions. So with that, I'm going to move to our first slide and turn it over to Campbell.
Thank you, Michelle. So FASB have issued some guidance on the implementation of financial instruments for debt securities. And this was issued in July 2021 last year. And if you get a copy of the slides, there's the link to where this is, but this is easily available on the FASB website. And the guidance covers the following: the fair value and amortized cost, maturities of investments, sales of investments, and trading securities still held. So one of the things we did a year on from the release of this guidance was looked at how it had been implemented, and saw and tried to identified a number of areas where the guidance wasn't being followed, or the guidance didn't cover specific areas and people were having trouble with it. So we've done two things. We've issued new DQC rules to address those issues, and we're proposing additional guidance, which is going to be in public review for the next month, to answer a lot of the questions that people have been having around how do they actually fill out particularly thorny issues related to investment disclosures. Go to the next slide, please. So we've updated what's called DQC rules. And the first issue that really these DQC rules are, the issues that these DQC rules are addressing, and we'll talk about those in more detail, is the use of the financial instrument axes for reporting the amortized cost schedule and the maturity schedule. And the guidance didn't really address where additional items were included in these schedules, like cash and equity, and which could cause filers to deviate from the implementation guide. But of course, everyone deviated in different ways. So the guidance and the rules is intended to help tidy that up. Go to the next slide, please. So just so everyone's on the same page what we're talking about, I've just got a couple of examples here. Here's an example of an amortized cost schedule. So this is the schedule where you've got the amortized cost, any allowance for credit losses, gains or losses, and fair value at the end. So this one's pretty straightforward, standard one. If we go to the next one. Next slide, please. And this is the maturity schedule, which is basically laying out the maturities for those investments and then reporting back to a total. Next slide, please. So what we've done is we've added a number of DQC rules, which we'll talk about in more detail later in the presentation. But we've added rules to ensure that the financial instrument axis has been appropriately used on these schedules. That axis is the one that should be used. Companies have used a lot of different axes to break up the investments that they have in their investment schedule. So this rule is intended to get consistency there. We've added rules to check the calculation of the fair value from the amortized cost. So those schedules should add across the amortized cost plus any gains, minus any loss, minus any of the credit losses should equal the fair value. There is a way, and the implementation guide talks about putting a calculation for that. But in many cases, the calculations have not been completed. And in a number of instances, you can't actually build a calculation because of the way the credits and debits are defined. So this guidance, basically this rule, does a double check on that calculation. And the third rule we've added is to check that the elements used in these schedules are consistent. In the amortized cost schedule, you have the option to include accrued interest or exclude accrued interest. In many cases, we're seeing those elements being mixed and matched. So they have accrued interest element, including accrued and excluding accrued. You need to make a policy election whether you're including or excluding accrued interest, and all those elements should be consistent. So this rule checks that. So we go to the next slide, please. So as part of this as well, we've issued guidance, and I thought we'd just go through some of the guidance just to give you an overview of what the guidance covers at a high level, but there's more detail. And this document is published. The guidance document is published as part of the public review. It should be published. It'll be either published today, which basically go through particular situations and how they're handled. So we'll just spend the next 10 minutes just going through some of the guidance, just to give you an idea what it covers. And it's laid out in a Q&A format. So for this first one, it's just as a series of questions. So in the case below, the breakdown of available security has subtotals. What axes should be used by the company to represent the subtotals of amortized cost? So if we look here, you see we've got some obligations, and they've got a subtotal for total obligations of state, municipalities, and political subdivisions, which is the 7th row down. That has a total of 34,925 for the amortized cost in the first column. So that then is comprised of another number of other investments, which is broken down by the type of state obligations they are. What has happened in the past, all of these numbers should be using the financial instrument axes, but since this is a subtotal, some companies then have gone and used another axis, like the investment type axes. And what this guidance is basically saying is the subtotals should be handled as members, and those members should be nested on the financial instrument axes. So the 34,925 would be tagged with the financial instrument member, as with the 4 numbers above it. But those members would be nested as children of the total obligations. So you go to the next slide, please, Michelle, which just gives the answer. So we have this on the slides. The value for total obligations of state municipalities should be tagged with the financial instrument axes with a member to represent the subtotal. So the children members should be then in the definition link base, should be nested in that way. Okay, the next slide, please. The next question was, the company has reported cash as part of the investment schedule. Should the value of 849, which you can see is the top row there on the left-hand side, should it be tagged with the cash member on the financial instrument axis, or should it be tagged with the concept cash? So this is quite common, where a lot of these investment schedules will mix available for sale securities with also things like cash and cash equivalents. And you can see a lot of the numbers on the left-hand side are the same as the number on the right-hand side. Like 849 is the same as 849. Right? There is not really cash as cash. It doesn't really have a gain or loss from holding cash. So what other companies were doing would be using the financial instrument axes for all of these with the cash member. And so what this guidance is saying, don't do that. the values really should tie back to what you have on the balance sheet. So the cash, if you've got cash on your balance sheet, then, and you've tagged it as 849, then on this schedule, that you should be using the same number for that. You should be using the cash element. You can also see they also have a total for total cash and cash equivalents. So then you would use the cash and cash equivalents element for that. And then for the 105, the 1378, all of these elements below, then you'd be using the available for sale, the debt elements with the amortized cost basis elements for those. And then you don't really need to do anything because you can, as you go across, the numbers are the same. Now there is a slight tweak on this. You may have to use the financial instruments axes if you've reported the total of cash and cash equivalents on your balance sheet for the cash and cash equivalents, but you have a choice there depending really on what you do in the balance sheet. And the guidance really lays out how you should do that in a lot more detail. So you go to the next slide, please, Michelle. So this is saying should be tagged with cash for both values in the amortized cost column. That is only if cash is reported on the balance sheet. If you don't have cash on the balance sheet and you have cash and cash equivalents, then you should use the financial instruments axes. And it's quite involved. It's a little bit complicated, and this is probably one of the most complicated things that the guidance deals with. So look at the guidance that's come out if you've got questions about that, and it goes through in a lot of detail on how to handle that. Go to the next slide, please. The next thing the guidance deals with is where they've got equity securities in the amortized cost schedule. As you can see here, they've reported equity securities, and people kind of struggle with this. What do I use for the totals, and how do I handle a lot of that? So, the equity securities shouldn't be using. People have used different elements for this, but just to be clear, if you go to the next slide, these values where you're reporting the equity securities should be using the equity securities fair value, not an NI element, and that we're not, in the case of the previous example, they'd be using the fair value hierarchy axes because they're split it up by fair value. Go to the next slide, please. This is the same presentation, but you can see here there's also a total for the 83624. This is the amortized cost. Now, obviously, equity doesn't have amortized cost, but in here it's also including cash as well. So that 83624. You can't really use the debt securities, the available for sale debt securities there. And there is no element in the taxonomy. So if you go to the next slide, what we're suggesting here is that use an extension element. Now, people have reported this. Most companies everyone's created their own extension elements. So, and this is quite common that people are reporting this. So the guidance is just suggesting an element that you use, which is cash and cash equivalents at carrying value and available for sale debt securities amortized cost basis. So it kind of groups the two together because this is actually surprisingly common that people do this. So the cash and the available for sale securities, you have a total for it. So it's just giving you a standard extension element for those. And then we're going back to the FASB to ask them to add an element for it. It's not a gap element, so they hadn't put it in originally, but it's just to make the schedules make sense. People are creating this value. You go to the next slide, please. The other disclosure is on the maturity schedules and the total for the 73561 and the 73933. And they're having different elements being used to report those totals. So just to be clear on this, the guidance is saying, and unless you've got other circumstances, but if you go to the next slide, then you should be using the, for the 73561. If you go to the next slide, please, Michelle. You should be tagged with the available for sale debt securities amortized cost basis, and the 7393 should be tagged with the available for sale securities debt securities, which is the fair value element. If you go to the next slide, please. One of the changes that has come in recently is for the CECL rules and the putting in the credit losses on these schedules and the FASB has an example in the implementation guide for this, but and that it shows this is the amortized cost, this is our credit losses, this is the value after the credit losses, the gain, the loss, and the total. We've looked at hundreds, probably thousands actually, of schedules, and no one actually does that. And so they'll have the amortized cost basis. They won't have any credit losses at all. So they just basically report kind of what you saw above. So what this is saying is if you've got the amortized cost value has the same value as the amortized cost before the credit losses, and you don't report the credit losses, then the default element to use would be the available for sale debt securities amortized cost basis. And you would only use the total for the debt securities cost after allowance for credit loss when you're actually showing, hey, here's the amortized cost, here's the credit loss, here's the subtotal of the difference between those two. Don't start with that second element. And that, it's not wrong, but the guidance is just saying that so you get consistency, and so the calcs work and just make everything significantly easier. And people keep asking questions on this. Should I use this element or should I use this element for this column? So use the first one of those two. We go to the second slide, please. So this is saying if not otherwise stated, use the element available for sales amortized cost basis. Next slide, please. I just kind of covered that. All right, this in the following disclosure, should the value of a 117 be tagged with the debt securities member on the financial instruments axis. So this you can see here is 117966, and the answer to that is no. This should be the default element for the amortized cost. We've seen some cases where people have put members on this. If you have something which can be represented by the default element, then you should do that. So that 117 in yellow, 966 at the bottom, you shouldn't be putting the debt securities member on it. You should be just using the element for the amortized cost basis. So if you go to the next slide, please. Should be reported with no dimensions and use the available for sale debt securities amortized cost basis. And all the values on that line should have no dimensions associated with them. Okay. All right, this is the final thing that the guidance suggests. I know we've kind of gone through a lot here, and I recommend that you go through and actually look at the guidance without public review. And you have any concerns about it, then it's public review. Please let us know. Or if there's other examples of things that you have problems with, let us know about those as well, and then we can add them to the guidance. So in this case, and this is quite common as well, is the securities will be split between the current and the non-current portion. So you can see here, there's the first set of items is non-current, and the 9.1 at the bottom is current. For the amortized cost and the fair value, there are actually current and non-current elements for those. So if there is a classification split between these, then you should use those elements. One of the issues, however, for the unrealized gains and the unrealized losses, there is no current and non-current elements for those. So what we suggest in those cases is that you split them between, you're going to have to create extension elements for those when you have this situation. Going back to the FASB to ask them to add these elements for these. So if you go to the next slide, please, Michelle. So the values excluding short-term investments use the element. So this is just saying the current and the non-current. The guidance basically lays out what are the additional 4 extension elements for the gain and loss, standard element names that you should use for your extension. Then hopefully we can get those incorporated into the next taxonomy, so it's not clear. This will only apply to those cases though where companies are actually splitting up those investments or classifying them with current and non-current, and that would be usually because they've got the totals on the balance sheet for the current portion and the non-current portion. Okay, if you go to the next slide, please. I think we have some CPE questions.
Great, thank you, Campbell. Yeah, we're going to take a couple of CPE questions here, and bear with me while I bring up the polls. Okay, so our first poll question, and hopefully you can see this on your screen right now. which of the following are covered in the FASB guidance for financial instruments debt securities? Is it fair value and amortized cost, pension investments, or equity? So just click on the one that seems most appropriate for those of you getting CPE credit. And also, even if you did not sign up for CPE, if you would like to get it, go ahead and respond to the questions, and then, we can go back and deal with the administrative side of that a little bit later. So we're going to take just another 15 seconds or so here, and then move to our next poll. Okay, I'm going to shut this down, and just for those of you interested, the answer was fair value and amortized cost. Okay, let's go on to our next poll. All right, when was the FASB guidance for financial instruments debt securities published? Was it July 2020, July 2022, or July 2021? I'll take about another 30 seconds or so here. Okay, just another 15 seconds. Okay, we're going to close down that poll, and the correct answer is July 2021. All right, so thank you very much for responding to those. And I'm going to move to the next slide and turn it back over now to Campbell.
Okay, thanks, Michelle. So we're going to talk about some of these rules we implemented to address some of these issues on the investments, and they were dealt with in version 19 of the DQC rules and version 18. So and there are a couple of changes that were made to the version 18 rules as we went through from the public review for those. And V19 is the proposed rules, and we have those. The public review started for those a few days ago. So you can go and have a look at. You can have a look at those rules and see if you agree with them. So there's really three rules here. The first one is, which doesn't really relate to investments, but we put it anyway because we had a lot of complaints about it, was bank ratios. And this is the making sure that banks have enough capital. So there's some rules in there for bank ratios and making sure that they're consistent. We added an investment schedule cross-calc. So those schedules we were looking at before, where you have the first column with the amortized cost and the gain and the loss and the fair value, we put a rule in which basically checks that those add across and all the possible combinations that you can have, and we'll talk about that. And then inconsistent accrued interest elements. And this addresses the issue I mentioned earlier, where if you've made a policy election to say our investments include accrued interest or exclude accrued interest, we would expect that all the elements you select are consistent with what your policy is that you have elected to use. So go to the next slide, please. So as part of the public review, if you have any concerns with the proposed rule, please let us know. Be specific as possible. How should it be revised? And how does the revision of the rule possibly improve the usability of the data? Or obviously, if there's mistakes in the rule, or if you try and run these rules, which you can run these rules against your own filings, and it's coming back, and you believe those errors are false positives, then please let us know. We go to a lot of effort to make sure we don't want to be reporting false positives, because that can be confusing to the filer. Or we need to update the message maybe and make it very clear what the issue is that you're having, why the rule is flagging. Next slide, please. So this is very small text, but this is the bank ratio. I'm not going to spend much time on this, but the bank ratio, this first rule is really just addressing scale issues. And this is basically looking at, there's a couple of things here. So we address the scale issues. A lot of people have been putting the percentages in as whole numbers. So if you've got, if your capital ratio is 20%, it should be in the expert instance, it should be entered as 0.2. A lot of people would be putting them as 20, so it comes up as like 200% or 2000%. So just to be clear on this, just make sure that these rules basically make sure that the scale on the elements is correct. The bank ratio elements also address issues where you have the relationship between these ratios. So there are 4 different ratios that have to be reported with different levels of adequacy for your capital, and this basically checks that the relationships between those ratios is correct. So if you've reported that you're not, your capital adequacy ratio and your well capitalized adequacy ratio, there's a bunch of different ones, and if they're inconsistent with each other, then the rules will flag. And usually this is picking up additional scale problems. If you go to the next slide, please. And there's some examples for these where it's just telling you what they are, and this is just really checking the ratios between those bank ratios. Next slide. Okay, so the next rule is investment schedule crosscalc. So what this rule does, as we talked about, is to basically make sure that the crosscalc works. And one of the reasons, this seems pretty simple, this would be pretty hard to get wrong, but the main issue that this is picking up is that if you've used inconsistent elements in those calculations, so if you've used something like a amortized cost excluding interest and a fair value including interest, that's what most of the errors are that we're seeing. So the excluding and including interest elements are not consistent in the schedule, and that's what this rule picks up. So the rule has a couple of components to it. One, there's a calc which basically is defining all the including accrued interest, and there's a calc defining all the excluding accrued interest. And that calc will work whether or not you've used the including the credit loss, you don't report a credit loss, you do report a credit loss, you do include the subtotal of the credit loss. So the rule will still work no matter what you do there, hopefully. But for the cases we've looked at, it seems to work fine. So that's what the rule's doing. So if you get an error for this rule, chances are it's not that the calc is wrong. Chances are that the calc can't be completed because one of the components is missing because you've used the wrong element. So if you look at the rule message, if you go to the next slide, the rule message will tell you, it'll tell you what it's comprised of. So you can see on the slide on the left, it's comprised of the amortized cost, the gain on securities, the loss on securities, the credit loss on securities. So it's telling you all the components that go into calculating the fair value. So if one of those is missing and you said, no, but I've reported it, then chances are you probably used the wrong element for the column. So you should go and check that. Now this calc will run on runs for every row in the schedule. So if you've got the schedule, it'll go through and you'll see which row it applies to on that dimensions. We'll say in this case on that first one, you can see it's got financial instrument axes equals mortgage-backed securities. So then it's basically saying this is for the row for your mortgage-backed securities, isn't adding across. So there's not going to be one error that says the calc is wrong for it. It's just going to it's going to go through row by row. So chances are, if you've got the wrong element for an entire column, you probably get an error for every, you might get 6 or 7 errors depending on how many types of securities you've got. So that's just good to be aware of. If you get a bunch of errors, it's not that you have to go through and fix 6 completely separate things. It's probably just going to change that one element for that column, and then all the errors will go away. Okay, next slide, please. Inconsistent accrued interest elements. What this rule does is it basically goes and looks at all the elements you've used, including accrued interest, and all the elements you've used excluding accrued interest. And then it kind of guesses what policy you're using. So if the majority of the values you report including accrued interest, it assumes then you're including accrued interest in your investments. And then if it finds any excluding accrued interest elements, it's going to flag those. And vice versa. If most of the elements you've used or values you report are excluding accrued interest, and then you've reported elements which include accrued interest, then it's going to flag it the other way. There is a policy election for this. And no one tags this. I don't think we found, I think we had one company or two companies tag this. If you do have a policy election, and that's a Boolean, and the rule will look at that. The rule at the moment doesn't look at that flag, just because there's so few people have used it. But if you think we should, then we can incorporate that, and then that way, if you're getting then the rule would only look at the error based on the policy election decision. But at the moment, it's so rarely used. So hopefully, we're thinking about potentially updating that rule. So if if you put the policy election in, then it would potentially mean that you're not going to get errors if you had them before. But at the moment, it's so rarely tagged. So just wanted to let you know that if you had a question about it. But anyway, the rule will default to the fact values that you've reported the most, and then it will assume that that's what your policy is. Now, there are a lot of errors for this. For this rule, this seems to be like one of the most errors, and people seem to be mixing these two elements up. So when you are selecting elements, make sure that the elements that you're using are appropriate for the policy election that you've made. Okay, go to the next slide. Okay, so that's rule set 19. That's in a public review. So if you want to run it, once again, you can go to our website. You can run those. You run your old filings through it, or you can run your proposed filings through it too and see if you have any errors. But just to be aware, it is in public review. There could be some issues with those rules. We're still kind of fleshing them out. But if you do see issues, let us know, and then we can tweak the rule and then improve them. DQC Rule Set 18 has been in public review. It's passed through public review. There's been a number of changes made to this rule set, and it becomes effective on September 1st, 2022. So it gives you a bit of time to fix those if there are any errors with them. But just to quickly run through what these are again, if you're not aware of them. You go to the next slide. So this is just a summary of the rules. There's one for equity method investment reporting, just to make sure that was consistent. We saw some issues there. The investment schedule, DQC Rule 134, which is most relevant for this discussion. This was expanded, and what this rule does, as we talked about, is making sure that the financial instrument axes is used for debt securities. It was originally only checking the element available for sale debt securities amortized cost basis. That has been expanded now to include all the elements that are really that you would expect to see, like the gain, the loss, the fair value, the maturity schedules, anything that should be used with that financial instrument axes has now been included. So if you'd run the public review, and we got feedback on this, so we've expanded this rule. So if you've run the past, then you want to just double check that you don't have any errors with that going forward. There are a couple of other rules we added from the FASB, which relate to extensible enumeration concept. Now, what this is what all this means is if you have a disclosure in your footnotes and you're required to disclose where that amount appears in the financial statements, what this rule is checking is, okay, you've got you are required under GAAP to report which line item this amount is reported, like pensions, for example. Your pension expense, you're supposed to report which line item it is included in. This rule is basically checking that you've included that. And your way you do that is something called an extensible enumeration. And you basically go through and you say, oh, this amount is included in this line item in the income statement or this line item in the balance sheet. So that's what that's doing. And 136 and 137 are kind of supporting that rule. 137 is looking at the location axes. There's a balance sheet and an income statement location axes. They're really used when you've got an amount which is split between two amounts in the balance sheet, and it's just making, or the income statement, and this rule is making sure that that's being done appropriately. And what it's doing is, if you've got a location axis and you've only got one member, it's basically picking up those to say, hey, this is only used when you're splitting things. If you've got one member, it means you're not splitting it, so why are you using it? Should we go to the next slide? There are a couple of other changes that were made to updates to existing rules as part of Rule Set 18. There was a rule added for the retirement plan sponsor location axes, and this is just making sure that you've used the correct members. There are a lot of extra members being added on this axis, so this was kind of tightened up. So if you see that, that's what this is. Rule 55, this only applies to where we got defined benefit pension plans, and it's basically making sure that the member structure is correct. So this is basically, there are a couple of issues that the FASB had identified where people were reporting this incorrectly. So we've gone through and made some tweaks to the rules to make it cleaner. This really affects those cases where if you've got a domestic plan member or a foreign plan member and you haven't put children underneath them, and that's what it's kind of looking for. And it looks against the values as well and make sure that that's all consistent. And so we've got 3 and 4 relate to that. One is for the domestic plan member and the foreign plan member and making sure that's working correctly. Reupdated Rule 127. There was an error in the rule message. So we've corrected that, and then we also updated Rule 127. If you're a REIT and you're running these, they were taking an extremely long, extreme amount of time to run, and the reason was that the schedules which list out all your investment portfolios or all your properties were being included in the rule. So those are being excluded now, so that if you ran these in the past and they took a long time to run, they should run in seconds now. So that's all been improved. Excuse me. Can we go to the next slide, please? Where's some CBE questions?
Campbell, thanks very much. Let me go on to some poll questions now. And this will be our third poll. Okay, so you should be able to see this on your screen now. Which of these rules are still in proposal stage? Is it the investment schedule crosscalc, the caption value matches financial statements, or investment schedule financial instrument axis? Which of these 3 is still in proposal stage with Rule Set 19? Okay, and we do have a question that we'll take once we come to the end of our poll questions. And just a reminder that you can click on the Q&A link on your screen and submit your questions there. Okay, we'll just take a few more seconds for this poll to be completed. All right, I'm going to close this one down, and just for those of you interested in the answer is investment schedule crosscalc is the one that is still in proposal stage. Okay, so let's go to our next poll. Which of these proposed rules checks the capital adequacy ratios have been reported with an inaccurate scale? Is it inconsistent accrued interest elements, investment schedule cross calculation, or is it bank ratios scale issues? Okay, just like another 30 seconds here for this question. Okay, I think we're going to close down that poll and we'll go to questions. So Campbell, the question we received is, are the extensible list items required to be used in any filing?
Rephrase the question a little bit. So, you've got to report all numbers that are reported. And the point of the extensible enumerations was really to make it easier, so you don't have to go and stick a whole bunch of members and dimensions on everything. So you can use an extensible enumeration to basically indicate, like, what is the member on this fact. So it's really part of the process of tagging a number. So it's intended to basically make the data easier to use. So it's really an alternative way to basically, rather than using a dimension and a member to report the fact, it's just say, hey, I'm going to use an extensible enumeration. And that's the way the FASB and the SEC is going. And they're basically saying, in this case, don't use a dimension to tag this number, use a extensible enumeration. So it's really a different way. It's not like, this is a number. Extensible enumeration really isn't a thing in the filing. It's just really a way to tag a number in a different way.
Great, thank you. And then we also just received a question, where can I download a copy of the presentation slides? We will be posting the replay and the full slideshow probably sometime tomorrow. So yes, I think the Q&A that Campbell set up is going to be really useful for people. But also, please remember that all of this information is included in the public review, not just the rules, but also the investment schedule guidance. So that's a written document, and we encourage everybody to take a look at that, review it, and let us know what you think. Is it useful? Is it written in a way that's clear and understandable? Do you agree with what's included in it, or do you have suggestions for ways to improve upon it? So we will make all of these materials. All these materials for the public review are available right now, and the webinar replay and slides, we'll have those posted by tomorrow. So I think let's just go on to our last slide here. And Campbell, do you want to talk through this about using the rules?
Right. So you can, and I mentioned this a number of times as we've gone through it, all of these rules, the public review rules, you can use the rules. You should probably use these. Well, the approved rules you definitely use. And the proposed rules, you may want to run those as well, just to give you a heads up. Just be a little bit more cautious with those. They may not, they're still obviously going through public review. They may be tweaked, but that may be giving you an indication of some of the things that may be not quite be right. If you want to do that, you can run them on our website. You can download the software. You can run them, and then there's a list on the right of all the vendors who support these rules and what version they're currently supporting. And so obviously this is a snapshot. Obviously V18's just gone in, and a lot of these folks are updating them now. So you should check with those vendors as well. So they should be, I think a lot of them are incorporating V18 now. So the time you go to do your filings, they're going to be incorporated. But you also have the option to run it from the web. The public review ones, at least, the filing agents that don't make those available because they're not finalized, but you can run those from our website, as I mentioned earlier.
Great, thank
you. The links are there on the slide, but you can find them on our website too.
Right. So Campbell, I want to thank you very much for the presentation today. And, again, we encourage all of our attendees to, forward the replay on to other people to take a look at who might be interested. Please take a look at the public review page. You'll see the 3 new rules as well as the investment schedule guidance. And, we hope that it'll be helpful for you. We do hope that you, take the time to review it and let us know what you think. Thanks very much. And, hope to see you on future webinars. And I know that we'll have a bunch coming up this fall. And actually, I believe we have one next week, which is focusing on our database and our APIs and our templates to help facilitate the use of XBRL data. So we'll be sending out more information about that, and we hope to see you on that as well.